But Ashok Kumar, the director at LKW Investment Advisers, joins us on the show right now. Ashok, hi, afternoon. How is it that you're viewing this offering, and who exactly is this product aimed at? Who is it best suited for, according to you?
Yeah, at the outset, this is clearly a product that is aimed at HNIs because it offers you diversification. That is, you don't participate directly in the realty sector, but you get kind of a proxy play therein. The product is a fairly complex product. If you look at it, the vehicle it uses to reach the market is the equity market. The kind of returns you see are debt returns, and the underlying asset is real estate. So it's a fairly complex product. It's something that a retail investor would do well to bide time, wait and watch, and then participate.
Okay. Let's just talk a little bit further about India's first REIT listing, that's Embassy. And Ashok, would want to understand whether or not you think there is enough appetite among Indian investors for such a product at this juncture.
So that would depend on whom you define as, Indian investors. If you're talking about the HNI category, yes, perhaps, because this gives you, like I said, this is a quasi-asset class where you get a proxy investment. So to that extent, yes, it's an alternative asset class of sorts that you can invest in. But, the kind of the routine, let's say the IPO investors that play for the flip, they're going to be disappointed because this is not a flip kind of stock. This is a stock that, it's listing for a different purpose entirely. You may see some gains coming in at moments where the rental incomes go up or there's a sale of property. But otherwise, there are unlikely to be triggers that sort of, send the stock soaring.
Ashok, what are some of the pros and cons of investing in, in a REIT? Investing in IRB in INV, for example, has proved to be fairly weak. If we take that example, if we take the IRB InvIT example. So what are some of the pros of investing in this one?
Yeah, some of the pros, clearly, if you look at the RHP of this company, it's got a quality portfolio mix that, that is reasonably diversified. There is some concentration risk in terms of, one park, which is the Manita Park in Bangalore, which contributes about 40% of the income. But otherwise, they have quality names as tenants. They have long-term leases. All in all, I think the rental income flow should be reasonably good. And that should, keep it floating at about 7 to 8% returns on the fixed, that is the debt component side. The equity side, I think, as you've rightly gauged, is we are partially blindsided by the fact that this is the first IPO. So what kind of price discovery takes place at a later date is anybody's call.
Okay. So give us a sense as to what you think are the pros and cons of investing in, in fact, just wanted to rather talk about the overall tax implications for retail investors from REITs and what, what levels one would start getting taxed at.
Yeah, as far as, again, this is, which, I started with the point that this is a complex product. So you have multiple levels of taxation here. The rentals, which will be passed on in the form of income, would be deemed to be interest income and therefore be taxed at the full marginal tax rate applicable to that individual who's investing. Now, there is also an equity component, which will be the gains that you potentially derive from the, markets. Your investment in the market, your investment in the IPO, you may see some capital appreciation, if at all any. That would be taxed as capital gains. Interestingly, it would be taxed as capital gains as a non-equity product because the underlying asset here is not equity, but rate. Right. So in terms of taxation, I wouldn't say it's a very attractive product. Like I said, this is a kind of a niche product that seems to be aimed far more at HNIs. Typically, this is a space where the institutional investors dominate. There's an opportunity for HNIs to also participate.
What about retail investors, Ashok? What would you advise them to do? And also, just a note on the pricing as well.
Yeah. As far as retail investors go, I think, those who are playing for an overnight gain shouldn't be participating here. Someone who understands this product for what it is, someone who's, I still don't buy the argument that is going around that this is, an alternative for a fixed deposit investor. Because the mindset of a fixed deposit investor is completely different. There is little scope for a capital loss over there. which theoretically there could be over here. So the retail investor would do well to probably watch how it lists. And if this company lists reasonably well, I think there will be a spate of issues in this space. So the retail investor would do well to buy time. Furthermore, I think this being a new product and SEBI's rules being relatively new in this space, I think there will be iterations, based on investor experience. So it's best for a retail investor to watch and wait and then participate probably in a subsequent issue, or if this becomes attractive at a post-listing date, pick it up.
All right, Ashok, great chatting with you as always on this highly unusual and interesting listing. Thanks so much for joining us. Let's take a very